Welcome back. As I mentioned, we have Dan O'Weiler here on behalf of Sterling Financial. Well, Dan, thank you for good. Thank you for joining us.
How have you been?
Been great.
You survived the rain?
I did survive the rain and all the beautiful sunshine. So
well,
it's all
we need
fantastic.
the rain. We need the rain. It would be nice to get a little bit more, but it was nice.
Well, it might be coming down the pike. Who knows? So we're here today talking about investment alternatives, and I know there's a lot of things out there, and a couple of things that I think we'll touch on that are probably, been in the news lately. So that's good, because I think people will have lots of questions about some of these things. So maybe we have a chart we'll show you. So maybe kind of go over these items for us.
Sure. Well, I mean, it's interesting that investment advisors are a dime a dozen, to be honest with you. They're like used car salesmen. Everybody will tell you how to invest your money. Your neighbor, your pastor, or everybody will tell you how to invest your money. Mm-hmm. But there are basically different standards that you ought to use in regards to how aggressive or how conservative you want to be.
Right.
I think that on the screen there's probably some things that talk about going from right to left. Mm-hmm. I think that there's, on the risky side, options and futures and those types of things. And the reason those can be so risky is because you can lose more than just what you put into it.
Right.
Okay.
Right.
There is no downside to it. Mm-hmm. With a stock, you can, if a company goes bankrupt, you're just limited to the stock that you have. With options and futures, that can go all the way down. So, but people look at, hey, if I don't want to be risky, I'll go into bonds. Well, unfortunately, bonds still have some risk to them, because if you think back in 2008, 2009, Lehman Brothers bonds, they declared bankruptcy. They were worth nothing.
Yeah.
GM declared bankruptcy. They were worth very little.
Right.
So there is some little bit of risk in bonds in regards to if a company goes bankrupt, those bonds don't have a lot of value unless they're preferred creditors or something like that.
Okay.
So sometimes people will go from equities to bonds thinking, hey, I'm now conservative, but you have to realize that there is some risk to those as well, depending upon what happens to the economy and interest rates. So as the farther left that we go, the more conservative that we get in regards to our investments. Everybody knows that money markets and CDs are very conservative, but unfortunately, they're just not paying anything right now.
Yeah.
U.S. Treasury bills and bonds, I think a 10-year Treasury is paying like 1.67%. It's hardly paying anything.
Right.
We get a little bit more into the insurance products, fixed interest annuities or fixed index are probably giving us the best return right now, and your money is still safe. Mm-hmm. So on that side of the line, the green side of the line, your principal is always guaranteed. You want to just get the best return you can when you want your money safe.
Right, exactly. And those annuities though, or actually not annuities, ones that pay dividends, what is that referred to as?
Well, dividends are stocks, things like that. Okay, so you're earning interest on CDs and money markets and annuities and things like that. So, right now the fixed interest annuities are paying probably, I'm going to say 2.5%, maybe 3% for 5 years. It's like a 5-year CD.
Yeah.
The fixed indexed annuities are probably averaging in the 4 to 6% range, and your principal is safe. Right. But on the other side, as we start going riskier, people get excited because I can make a lot more money. Well, you can lose
a lot more money too, right?
You can lose a lot more money. The big thing I have people asking me all the time is what about Bitcoin and cryptocurrency? Right. Well, that's exciting, and there's a lot of people who have made a lot of money, but just as soon as you can make money, it's just as quickly as you can lose money.
Right.
The thing about cryptocurrency you need to realize is that there's really nothing backing it. There's no federal government or financial institution that is backing the Bitcoin. Mm-hmm. It's just that people are willing to accept that as payment right now, and so there's a lot of emotional value put into Bitcoin,
right.
and it can go up just as quickly as it can go down. And so people ask me all the time, you know, what about Bitcoin? Well, it depends upon how aggressive or how conservative you want to be as to whether or not you want to try that. I don't have a problem if you've got a fairly solid foundation for your portfolio and you say, hey, Dan, I have $10 or $20 or $25,000 I want to take a flyer on. I don't have a problem with that, doing some more aggressive things as long as their retirement is set up and they got income coming in and things like that. And this is money that you can afford to lose versus just depending on it that you need.
Exactly. Well, yeah, I mean, there's a lot of research that people can do on Bitcoin and podcasts and things like that. And you've got folks like, you know, Elon Musk and a variety of others that are backing things like that. And it really is an educational process too. I mean, even though you're handling their money, it's probably advisable for them to do some research, right?
It is, and especially if people come to me and say, hey, I want to buy some Bitcoin, I say, okay, let's make sure our retirement is set up and you can afford to lose this money. If we make, what I have found, Lisa, is that losing money at this stage in your life is going to affect you much more than making a little bit extra money.
Right.
And so at this stage in their lives, losing the money that they have will affect their lives much more rather than trying to take a high flyer. I think I put together a slide that has a little what I call the financial house, so to speak.
Right, that talks about your risks.
Yeah, your risk, and basically the green portion of our house is our foundation, and that's where our safe and secure money wants to be. You know, the middle part is our walls, and that's where our moderate risk is, and then our roof is the risk assets. Well, in the storms of life, so to speak, when we have a storm, the first thing that goes is our roof. Okay, we want a strong foundation.
Right.
And so in the financial storms, that's the first thing that goes. We want to have a solid foundation, and the percentage that we have in each of those sections will depend upon how aggressive or how conservative we want to be.
Right.
When we sit down with people, we develop what we call a risk tolerance score. And a risk tolerance score will say, okay, based upon certain scenarios, how much risk do you want to take on a scale of 1 to 100? And it comes up with, I have a risk tolerance of 35, or I have a risk tolerance of 37.
Okay.
So what we want to do is set up a portfolio that has a risk tolerance of, in this example, 36. Okay, their current portfolio is sitting at 65. Well, we want to reallocate that so their risk portfolio is in line with their risk tolerance.
I see.
And so your portfolio should be based upon your risk tolerance, not on some subjective number that you come up with.
Right, right. I think that's a good way to look at it, because, you know, some people may all want to be in the safe and secure, but then there's others who want to sort of, you know, dabble in some of the other things.
Well, I don't think everything ought to be in safe and secure. I think you do need have some growth as well.
Right.
But you want to make sure that we have enough income that's going to last you the rest of your life, and so you're not dependent upon how much growth or how much you lose.
Right.
So if you can set up a plan that's going to be provide you the income that you need, we can wait out some of these drops in the market or whatever it might be. I mentioned in my seminars, I say I could have $2 million worth of land in the Mojave Desert, but I could be cash poor because it's not generating income to me.
Right.
Okay? And income is what pays the bills every month.
Got
and
it.
so between, you know, Social Security or pensions or annuity payments or whatever, you want enough income coming in. So when we do have the storms of life, you can kind of ride these storms out, so you've got enough income to pay those bills on a monthly basis.
Right. Well, great advice. Now, if somebody wanted to get in touch with you, how do they do that?
Well, they can give us a call at 949-859-8900. It'll probably be on the screen at some point, but they can give us a call. Be happy to sit down with them at any time. They can also visit our website at sterlingfa.com.
Okay.
And so we'd be happy to chat.
Good. Well, I appreciate the information. Thank you so much.
Hey, it's always a pleasure.
All right.
All right.
Thank you. And we'll be right back after this.